I'm fully convinced these coins will be worth hundreds of 100,000, say within a year, and hundreds of thousands, and then ultimately millions of dollars per coin as the next 5 or 10 years roll by. The people who have gold are going to have a better place at that table in terms of the monetary reset versus those people who don't have gold. I think what's going to happen is I think we're going to have much higher inflation, like 12, 13, 14, 15%. And at that point in time, the screaming is going to get very loud from the US population.
Lawrence Lepard begins by old and Bitcoin enthusiasts share a common understanding of the flaws in the current monetary system. He cites Peter Schiff, a known critic of Bitcoin, whose analysis of monetary debasement aligns closely with Bitcoin proponents. Both groups recognize the issues of excessive government spending and the erosion of monetary value. Lepard emphasizes Bitcoin's adoption curve as a critical factor in its value proposition. The limited supply combined with increasing demand from a growing number of investors positions Bitcoin as a store of value. He predicts Bitcoin's value will continue to rise, potentially reaching hundreds of thousands or even millions of dollars per coin in the coming years. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
They're both good monetary assets. They're both forms of sound money. Before Bitcoin was invented, gold was the best choice, without a doubt. The people who own gold and the people who own Bitcoin tend to be actually very, very much aligned on what's wrong with the world's monetary system, right? I mean, it's like I take a Peter Schiff who hates Bitcoin, but his analysis of the problem and the monetary debasement issue, the government spending, all of it. I mean, we see things absolutely, positively eye to eye. Now, with respect to the two assets and comparing them, they're different. Okay, one has a much longer track record, much longer history. It's physically present. It doesn't require any energy after it's been mined. I mean, it's just a brick and it sits there. The Bitcoin network requires constant energy to operate, but and there's no real blockchain in gold, right? I mean, if I hand you a piece of gold, nobody knows that I did that, and there's no record of it, and it's totally private. Whereas in the Bitcoin world, everything you do there's a record of a movement. Now, the movements are anonymous because the code, the addresses are anonymous, but nevertheless, there still is a record there. What Bitcoin is Bitcoin represents a technological invention called, digital scarcity. Pre-Bitcoin, there were a bunch of attempts to do it, and they didn't work. And there was never a way to create digital scarcity. As we all know, you can copy a file, you can copy a movie, you can copy music. It's pretty easy to copy anything digital. Well, the Bitcoin guys eventually, the inventors, eventually figured out how to create something that was digitally scarce, which really is it's a big deal. It never existed before. And so with that digital scarcity, they created a network and they set up a fixed limit of 21 million of them. And so in a sense, it has become a form of quote unquote digital gold. I mean, people are, I think the number one use case for Bitcoin is still the store of value use case. I mean, it's not like people are using it heavily for transactions. I mean, there is a transaction layer coming. It's called Lightning. It's going to work. It will be used for transactions in the future, but right now, people are buying it because they want to hold it for long periods of time, and they feel like it'll protect their purchasing power, which is why you always bought gold in the past. And the difference between the two that makes, in my opinion, makes Bitcoin, a superior choice if you're looking for alpha, admittedly with a lot more volatility, is that Bitcoin's undergoing an adoption curve. I mean, there are 8 billion people on the planet. There are 21 million Bitcoin. There are 46 million millionaires. There are 21 million. I mean, every millionaire in the world can't even have one Bitcoin. And I think ultimately someday every millionaire in the world is going to want some Bitcoin. And so, in order to get some, they're going to have to pay a much higher price. So that adoption curve has made it, since inception 15 years ago, the best performing financial asset ever. I mean, in terms of, growth and value. So, I think that's going to kind of continue now. The price one pays for that is that you have to be very comfortable with the volatility. I mean, I would never recommend anyone put money into Bitcoin that they're not willing to see, decrease in value in a bear market. And these bear markets have been brutal. So, you've got a dollar cost average, and you've got to have a long-term perspective on it. But I think, I'm fully convinced these coins will be worth 100,000, say within a year, and hundreds of thousands, and then ultimately millions of dollars per coin as the next 5 or 10 years roll by. What we're seeing, I think, take place is a gradual awareness and transition from the fact that the US dollar is not as good as it once was, and so that if you have excess earnings or savings in your country, you don't want to store them in treasury bonds. And of course, net US treasury bonds held overseas have been declining since 2014. So this is a long-term trend. But you'd much rather save in something that is going to appreciate in value. And so gold and silver, make the most sense. I mean, most big, the countries, very few countries have made the jump to Bitcoin. I mean, El Salvador did. It's a dinky country. I think there's some big countries in the Middle East that are doing it on the QT. I think Russia might even be doing it on the QT. I don't know. But the traditional go-to neutral reserve asset is gold. I mean, you've got 5,000 years of history. Everybody knows what it is. And these countries aren't stupid. I mean, they can see what you and I can see, which is that the money is being debased. Worldwide money is being debased, and they probably are, to some degree, the calculation, they're making a bet in their head that says, okay, it's being debased, and not only is it being debased, but it would be one thing if it was being debased, but the trend was going to go away and it was going to get better and it wasn't going to always be debased. I mean, that, okay, fine, you had some inflation, but you fixed it. But the problem is it's actually being debased, and the debasement's getting worse. And so what I think they're saying is, we could see where this is going, and it's not good. And there could be a monetary reset at some point in the future, and we're going to make the bet that the people who have gold are going to have a better place at that table in terms of the monetary reset versus those people who don't have gold.
Lepard envisions a future with significantly higher inflation, necessitating some form of monetary reset or restructuring. He highlights the possibility of Gresham's law taking effect, where bad money drives out good, leading to a decline in fiat currency value. He also discusses the challenges of managing a fund focused on gold, silver, and Bitcoin, emphasizing the importance of responsible government fiscal policies. He suggests that if the U.S. government were to adopt more responsible spending practices and cut unnecessary expenditures, it could mitigate some of the issues related to debt and monetary policy.
The dollar still is the major reserve currency in the world, and I Brent Johnson and his dollar milkshake theory is not entirely wrong. I mean, if the dollar has trouble, all currencies will be having trouble. The dollar may arguably could have trouble last. There are two sides to that argument. But what you described, fiat apocalypse. I mean, that's several steps down the road. I think that between here and fiat failure, which is kind of what I think apocalypse would equate to, we're talking about just very high inflation, very high and persistent inflation. Kind of think about South American countries like Argentina or Brazil or other countries that have just had, double-digit inflation. Not, the last cycle, 9% was the top, right? In stated. I mean, it's, and that's the other thing, of course, we haven't got into the fact that, I mentioned it earlier, but the numbers aren't accurate, right? And we all know that they're lying about the numbers. I mean, if you look at like a shadow government statistics, calculation of inflation, it's much higher. But the point is that I think what's going to happen is I think we're going to have much higher inflation, like 12, 13, 14, 15%. And at that point in time, the screaming is going to get very loud from the U.S. population. And arguably, there'll be some kind of a monetary reset or a restructuring or reform of some sort that will lead to a fix of this before all fiat completely fails. I mean, I think there's some possibility that they won't reform it, and that it'll just kind of continue to grow worse, and ultimately, Gresham's law will take over, and fiat will, more or less become worthless. I think that is a possibility. And I'm not trying to be hyperbolic. I'm not trying to scare people. I'm not rooting for hyperinflation because it'd be a terrible, terrible event. But it's not, if you look at how this country being the United States, has behaved with respect to its monetary and fiscal policies, and if you look at the things we're doing and you look at our debt to GDP, um, all of these characteristics, when they have been exhibited in other smaller countries, admittedly not the world's reserve currency, admittedly not the world's leading military country, have led to massive devaluations of the currency and or hyperinflation. So, to blindly think, well, the U.S. can get away with doing the exact same things that in all these other countries have led to high inflation and hyperinflation and not have any impact, I think it's folly. I mean, there's just no way that that we're not going to have an impact. The question is, how bad does the impact get? And then the question is, how do the policymakers respond? I mean, the one thing, I mean, I manage a fund that's focused on gold, silver miners and Bitcoin. And the one thing I say to anybody who's looking to invest in my fund is, because if they're smart, they'll say, well, how does this go wrong? How do we lose money here, Larry? What do you worry about? And I tell them, and then of course they laugh at this response. I say, well, look, if the U.S. government were to suddenly get really responsible, and stop sending money overseas and close all our military bases and cut back our military budget by 50% and means test Social Security and means test Medicare and, cut all unnecessary spending and quote unquote balance the budget. If our government were to do that, then, what I'm describing in terms of the debt, and so forth, I mean, it would be less of a problem. I mean, there would be potentially there'd be a way to work our way out of it. I mean, we did have this much debt to GDP coming out of World War II. Now, and they used financial repression, yield curve control to manage that. Different demographics. I mean, you had all the GIs coming back. You had the growth of the automobile, interstate highway system, appliances, houses, all of it. So what happened in that period is we actually grew out of the debt that we had. The debt to GDP was very high and problematic, but by repressing the bond market and the underlying growth in the economy, got us out of that problem. Slightly different now. We don't have a baby boom. We didn't just win the World War. We all have cars and appliances and houses. So it's not, we're not going to necessarily as easily grow out of it. Now, things like AI and some other developments could help, but the point is that it's a mess, and they're going to have to have, I think they're going to have higher inflation, and then I think they're going to have to eventually try and figure out a way to balance the budget and get the monetary system back on an even keel, because what we've seen is it's progressively gotten worse and worse. I mean, each monetary event gets bigger and causes more damage. The bursting of the dot-com bubble, that was one event. The GFC, that was another event. COVID was another event. And each one keeps being bigger and bigger than the last one. And at some point, the monetary system doesn't necessarily hold together. I mean, that's how I see it.
Lepard compares the current situation to the post-World War II era, when the U.S. had high debt to GDP ratios but managed to grow out of it through financial repression and economic growth. However, he acknowledges that the current demographic and economic conditions are different, making it harder to replicate that success. He concludes by stressing the need for higher inflation to address the debt problem and the eventual need for policymakers to find ways to balance the budget and stabilize the monetary system. Each monetary event has been more significant and damaging than the last, and Lepard warns that the system may not hold together indefinitely. Please like and subscribe my channel.